small companies in the tech field, specifically internet, digital media, and software, helping them raise capital.
Investment banking.
Yeah, investment banking. So
actually, the show, initially I planned to create a show which would call In Bed with a Venture Capitalist. And I wrote about it in the blog so you guys can find it. So that was the initial idea.
Yeah.
Now, because I didn't find real time to put into production, and I plan to have it as a big television show, so it would be costly, it's time consuming, so this is the small version. So instead of a venture capitalist, I just decided to be a millionaire and just have a larger pool of friends that I can introduce to you guys. So go ahead. Yes.
So so investment banker. I didn't want to say investment banker since they have such a bad I guess reputation these days. But
investment banking,
investment banking. Well, maybe venture capitalists too. But investment banking, so I focus specifically in internet, digital media, software, and help them raise capital and sell themselves or buy other companies or go public or whatnot. But that chapter is coming to an end, and I'll actually be leaving San Francisco to join the exciting world. I know this is kind of like one of my last memoirs and presents to San Francisco in the Bay Area. But so I'll be leaving in August to move to Atlanta, better known as Hotlanta. This is the best part. This is actually why I came, just for all the hands-on contact with Olga. So I'll be moving to Atlanta at the end of, or the beginning of August to start in private equity. So that is my story.
Which fund did you join?
HIG. HIG is the fund that I joined, and I'll be basically what I'll be doing there is choosing which of these internet, digital media, software companies, business services, technology-enabled services, which of those companies to invest in. And it won't be. Are
you putting your own money too? No.
I will have a chance to put my own money in as well, which is what's exciting. That's what I really like about private equity versus investment banking. You actually get to put your own money and back your own theses and your thoughts on different companies instead of being in a more transaction-oriented environment where you're just all you're really after is the fee, the fee that you get, regardless of whether or not you think the company is good or bad, as long as someone else buys it, right? So right now, because I work so much, I'm unfortunately pretty limited the amount of activities I'm able to partake in. But since I moved to Atlanta, the hours will be a little bit better, the work will be a little bit more enjoyable. So things like golf, tennis, more outdoors, continuing fitness. I started yoga a little bit, but obviously wasn't able to maintain that. One of the biggest mistakes that I've seen is a lot of these entrepreneurial tech companies will try and run out and get venture funding as soon as possible. They'll start burning through cash and panic, and then run to an investment bank and try and retain them to raise some sort of venture money. But the problem with that is that even if in the case where the product or the service is proven and they do raise money, the venture capitalists will own 90% of the company, right? Giving up just a lot of the company because the risk inherent in that business, investing in that business, is still so high. So the recommendation would be to bootstrap and basically self-sustain it, raise your own funds, friends, family, whatever it is, however it is you can possibly get it, for the longest amount of time possible before actually going and getting that outside financing. The thing is, even debt that you would think is so expensive, like credit card debt, 15-20%, obviously a company like that's cash strapped would be hard pressed to pay those interest payments. But the thing is, if you factor in the cost of capital from taking in money from venture capitalists, are going to demand 80% of your business in exchange for $1 million in financing, which will last 6 months given your cash burn. It's the cost of that capital doesn't seem as high when compared to kind of like what the venture capitalists traditionally ask for. So.
Mistakes that you have seen so far, the companies that I presented to you guys were making something more than most common. Besides the overfunding on the initial stage and
overfunding, I would say, is just a mistake in the process of developing that company to maturity. With investment banking, the thing is, when someone comes to an investment banker and says, hey, we want you to raise capital for us, the investment banker automatically wants to say, all right, definitely, because they don't give a shit about how good that company is. from raising that capital, right? But the thing is, if the company sucks, no one's going to want to, invest in the company. And so what will end up happening is the bank will waste a lot of time trying to raise capital for a company. They'll end up being a failed process, and it'll just waste the banker's time. The client won't get capital, and everyone will be pissed off. But the thing is, as far as like mistakes go with entrepreneurs, approaching investment banks, that's not really the focus, I don't think. I think the focus, the mistakes that they make is when they approach potential investors. Because these investors have seen hundreds, thousands of, potential companies who are begging and clawing and asking for money, right?
Sure.
So it's not really a mistake they make. It's just, at the end of the day, it's become such an efficient market that you just really have to have a good business, right?
Right. So let's talk about this. What does constitute a good business?
Well, I mean,
what is it? What does it mean for investor banking? A good business, a good deal to work with.
Okay. Yeah. So a good management team.
Again, define good, because some people understand it, but some really don't. So define it.
A proven management team, who's done
Track
this
record,
before.
right?
Sorry?
With track record.
Yeah, track record. So a management team who's done this before, who's proven they can do this successfully, essentially who just has a lot of experience.
Yes.
Market opportunity. If the company is attacking a very large market opportunity with a very large that's growing very quickly, that's even more reason for the this investor to be kind of sold on the idea.
Sure. What trends are hot now?
For our space in particular, internet, digital media, software,
Yes.
like all across the board, it's extremely hot right now. From mobile to social media, software as a service, it's all extremely hot right now. It's all within kind of like the subsectors. Each of these things are just as hot. Within social media, you have mobile social media, then you have like kind of like cyber worlds, social gaming, right?
Tell me about social gaming area now.
Social gaming is interesting. It's kind of
when Zynga seems to be really taking quite a lot of space. So how to compete?
Yeah, and Zynga, Playdom, Playfish, all those guys.
Yeah. So how to compete with those big guys?
Well,
Some little guy outside of Silicon Valley, especially, that doesn't have real understanding of the dynamic of the industry. What can they do?
Yeah,
where the innovation comes?
They can come up with the greatest product in the world, but it's all about marketing, right? So
Marketing. Okay, let's focus on marketing a little bit.